Tesla shares right now, take a look, we're at $306. The EV maker stock losing more than 8% yesterday. Its market cap falling below $1 trillion. Joining us right now to discuss what's going on, John Murphy, senior auto analyst at BofA Securities. Good morning to you.
Great.
I don't know. I mean, we see Elon in the headlines every single day. These days, more for Doge and everything else than Tesla. But now this is here. How much do you think they're related?
So, I think they're certainly piling on. But when we look at sort of the fundamentals of the company, it's got product that is pretty old at this point. When you look at the 3 and the Y, the 3 is 8 years old, the Y is 5 years old. You think of standard, product cycles in the traditional industry, they're 5 to 6 years. So these things are very old. And when you look at sort of the Chinese competition, they're 2 to 3 year cycles. So I think there's a real issue with the product cadence, and we need a lot of new product to come, which is supposedly around the corner. But
do you think it is around the corner?
Well, I mean,
the
claim is this entry-level vehicle at $30,000 is going to happen in the first half of this year. Now, we haven't seen any pictures of it yet, right? So, I mean, that's a little bit odd not to have a prototype out if we've got a product coming in the next few months. But you can't deny that some of the political commentary, which is a little bit polarizing, depending on which side of the aisle.
Do you think that's changing the number of people buying and selling Teslas right now?
I think the consideration set is probably gone down on that. So if you think about the funnel of people that consider your product, I definitely think that probably is.
You think it's gone down? You don't think that it's been matched on the other side by people who love President Trump?
Most of those folks are truck buyers and ICE vehicle buyers. So, I mean, I don't think there's a one-for-one replacement. Certainly not in Europe either. And
how much do you think you should think about the valuation of this company as a car company versus something else? Because even at this valuation, you can't really say it's a car company.
So, I think as we look at our price objective, 50% of it is composed of robotaxi and FSD. So, I mean, I think as you're looking at it, the vehicles are the hardware necessary to get out there, right, to deploy the software. But ultimately, this is really an FSD and robotaxi story.
And you believe, okay, so to match that valuation that we're looking at right now, you have to believe, I think, that FSD not just comes to Tesla, but actually ultimately gets sold or licensed to Ford and Toyota and everybody else, no?
I think there's a possibility that that's a component of it. But I think that there's a extreme lack of understanding in the industry as to the utility of what they deliver to consumers. And it's to get from A to B quickly, right? And if FSD really works on an autonomous basis or even a semi-autonomous basis and means that vehicles can't hit things, the reality is speed limits could go up. And I think there's a real lack of understanding that your core function is to get people from A to B quickly. And if you can do that, faster, you actually create real value. And we've done this in the past. We did it with the Model T in the early 1900s. It's actually happened in the past. So I think there could be potential value creation that goes beyond FSD and Robo.
Can I ask you a question about that, though? Because I've heard this concept, this theory of the case, that somehow speed limits are going to move up materially as a function of full self-driving. That would require, I would think, a generational change of effectively getting vehicles that do not have full self-driving off the road. Because as long as there's a human behind the wheel, it seems to me that they can make errors that maybe the computer can't. And so the computer is effectively playing against the human, which is even harder.
So in the near term, you'd have to focus on highways and have dedicated lanes like we do HOV. So we have precedent for this happening actually right now. The reality is, you could have sort of the auto industry taking market share from planes and trains, over time going to New York to Boston, New York to Detroit, New York to Miami. All of a sudden you could plug into your pod and go, in your car as opposed to being sort of molested at TSA and getting through and dealing with all of the cumbersome of getting on a plane. So I think there are real opportunities in the near term.
When you say near term, most people don't think that you're going to be able to go from New York to Boston totally hands-free for maybe another 5 years.
That's not too far off right
maybe
now
10.
in some of in FSD and some of the other programs that are out there from automakers. So that's actually not that far off. Doing it at a high speed might be far off, and that's where having Elon involved with the government, potentially getting these horrible networks that we all drive on that are 100+ years old, that are blacked up yellow lines and green and yellow and red stoplights, which are bizarrely old.
Right, but everything I've ever read about the sort of super fast HOV lane situation would actually require literally building a barrier between the rest of the vehicles, because the idea is that right now if you were going to have cars driving at 75, 85, 90 miles an hour down one lane, even with a double yellow line, if there's a human being that decides that they are making an error and getting in that lane, all of a sudden you have a big problem.
But Andrew, we certainly have that with these Jersey barriers that we kind of look at right out here on the street. That's not that hard to do. I mean, like putting up the barrier in the lane. That's not it. What you probably really need is a smart road network, so 5G connectivity, so the vehicle is essentially tethered to the road, right? So you have the super high-speed computer and vehicle connected to a road. But also, that's not that complicated either. It's a question of do you want to win in this industry? And I think the U.S. really needs to look at this and take a step back and say, listen, China is competing the living hell out of us around the rest of the world. How do we innovate and win? And it's going to be on the tech side. And this high-speed travel is really sort of the core and what the sort of the utility of the industry needs to deliver to folks. And it is how you get GDP growth. I mean, we could get into a whole discussion here. It's how you get GDP growth out of this 2 to 4% band in this discussion we keep getting stuck in. I mean, when China was doing 7 to 8%, it was because they were getting people in cars and they were getting out of two-wheelers and bikes and moving farther and faster. So I think this is a real important thing, not just for the auto industry, but for society at large, that you get people moving farther and faster. And I think FSD is one of the keys, for society and for Tesla for unlocking that.
I think it is too, just on a much longer-term basis than you may think it is.
Correct.
The idea that it's going to happen in the next 4 years, to me,
But I think we have an administration and somebody that's involved in the administration that might be focused and one of the few people that actually would advance the ball on something like this.